Dinshaw Irani joins us. Doesn't matter, markets are down. क्या बात है, yellow. Friday mood, Saturday working है जी इस बार तो. Saturday working है.
Yes.
Don't get into Friday mood early morning. कल भी office आना है.
Yeah. So you can imagine what I'm going to wear tomorrow.
Yes.
Today,
yes. I don't want to imagine. Trust me. Okay. What should one imagine? Where are markets headed now?
Well, Nikhil, you said it very beautifully that when the markets reacts, basically it's positive news honored very well by the markets, and the negative news is also gulped up by the market. So basically, that's how it is. I think the markets are tired of seeing corrections. In fact, I was just looking at the data points which my analyst came up with on Monday, because we were also panicking that day. And we looked at the correction from top to bottom. So the index, the Nifty 50 had corrected some 13%. The median correction, however, within the stocks was 19%, which is not too different from the index. But once we looked at the 500, the NSE 500, the median, the actual correction was something like, I think 17%. And sorry, 15% from the peak to bottom. And the median correction was almost 30% in the stocks. So it's obvious that some of the stocks would have collapsed 50, 55% kinds. So it's obvious that there was a lot of panic happening. And frankly, the large caps, look at the fact that after the 13% odd correction, you're already looking at 18.5 kinds of forward earnings for that bunch. So it was obvious that things are looking too bad. The panic was on the street at that point in time. And I think we took a very proactive call. In fact, on Monday itself, we started, picking up some few names which we liked.
I've got I'll have to interrupt you there. I've got a message. I will not tell you the name. You can guess. Please let Mr. Irani know that Helios is working tomorrow. I'm not telling you the name. I'm not telling you the name.
I can very well guess.
Okay, back to markets now.
So as I said, that we finally decided that let's start adding to this. This is too much panic on the streets, at least in the large cap space. So we added to our favorite IT names. We added to our platform companies. Not that they've not done much, but that's how we went about it. So that way.
You've been talking about financials so much so that Helios has launched a banking fund. And now banks have started outperforming. For somebody who's watching the show and now that knows that you will be coming to office tomorrow also, but if they want to know that beyond that, is it time now to, let's say, start a SIP in only banks? As in like start a bank Nifty or dedicated SIP for banks only?
So basically, Nico, if you remember, the rally started with that one single statement from RBI saying that, look, I'm biting the bullet. I'm going to infuse liquidity. I don't care about the rupee. I'm going to, in fact, buy dollars and throw in the liquidity of rupees as such. And that's how. So that came on Monday evening. And since then, the sector has, if anything, has done fairly well from that level onwards, because that was what was constraining the sector, the liquidity, the way it had been sucked out of the system to manage inflation and the currency. I think that was too overdone by the central bank. And I think finally they came up and said, okay, fine, let's do this. So I think now from here onwards, in fact, we've seen this in other markets also. Whenever the economies are picking up, these are the sectors which do very well. The lenders and as well as the non-lenders. And within the lenders, we are very comfortable with the consumer banks. They're also selectively though, because some of the consumer banks have gone into microfinance and massively overboard on unsecured lending. So there we are cautious. But the banks with good franchises, that we are very comfortable with. And coming to the non-lenders part, I think the ones, as we keep calling the gatekeepers to wealth, which is your exchanges or the RTAs, or for that matter, they'll have blips in between. But I think that sector is going to do very well. So I agree with you. I think this is the way to go about. In fact, these are the times when the SIPs can really generate positive alpha going forward. Massive positive alpha going forward. So I think you're right in saying that, Nikunj, this is the time to get into a financial services sector-focused fund, which will help out. And ours in anyway is a very true to label fund. We don't have a single stock outside financial services within that fund.
Okay, I have just one more follow-up question, which is that if one looks at financials, last 3 years banks have underperformed, NBFCs have underperformed, largely lenders. But financial intermediaries have done very well. Mutual funds, brokerages, depositories. So as a category now, could it change in favor of lenders completely?
Yeah, actually, you're right, because I think the outperformance of the non-lending part, which is the intermediaries as you call them, that has done very well. In fact, as I said, that was the one which was propping our fund till now, and now it's the other way around. The tables have turned, and it's the lenders which are going to partake in this. And frankly, I mean, as I said, the overload on the lenders was that they couldn't raise deposits at a good price. I mean, you've seen that in most of the names, right? The deposits growths were there, but they couldn't. They had to constrain back on the lending part as such because they weren't comfortable with the way the thing was going, and they were looking at their loan deposit ratios and stuff like that. I think that is out of the way now for most of these guys. And frankly, I mean, with liquidity coming in, it'll be much more easier for these banks to raise deposits at good rates. And going forward, obviously, the NIMs also will look fairly exciting. And frankly, I mean, interest rate cuts, anyone can speculate. But our feel is that given so much of infusion of liquidity in the system, I don't think RBI will be proactively looking at interest rate cuts right now. They'll probably wait for this to see how this liquidity is absorbed and then probably take a call later. I don't think this next week when the RBI meets for the rate setting, I don't think that's going to happen there. But let's see how that goes.
All right. Hi, Dinshaw. Good to be speaking with you, Shrishti, on the other side. I just wanted to put up quite a straight question to you. In the recent fall in the markets, how did you play that? Did you go ahead and increase your exposure in any of the names or sectors, if you may highlight? And since we also know that you also have exposure in some of those high beta names which have seen a bit of a correction maybe on the back of the earnings or on the back of the market volatility. So what was your strategy been, and how did you play the markets?
So Shrishti, we've been, I mean, as I said that when I tell my investors that, look, this is the time you can really get good alpha, so don't borrow SIPs. Obviously, we also follow that same policy. So we've been, I mean, as I said that Monday was the worst day. I mean, as in the way the indices collapsed and it was looking like panic. We started adding, not from Monday onward, we added earlier also. We added to our IT names, which we liked. We've been liking them for a while. And I think going forward, they do fairly well. So some of the large cap IT names we added to. We did add to a mid cap IT also. We added to our banking names a little bit. We were nibbling at those names as such. Then as our platform companies, quite a bit of collapse in those names. So there also we added a bit. Again, very selectively, not across the board, because we were looking at value somewhere, so that way. And frankly, I mean, we've always been looking out for ideas to add to our portfolio, because this is a time, actually, our feel is that this year itself is going to be a stock picker's year. So you'll get your time to accumulate your stock, you'll get your time to identify the stock, because I don't think the markets are going to go anywhere from here onwards also. And our feel is that, if anything, probably second half of the year is when the real upside you may see going forward. So our feeling is that the first half may be just a time correction, given that the fundamentals are not picking up as much, but the values have corrected. So that's how it is.
All right, but Dinshaw, if somebody is planning to create a fresh portfolio out here in this kind of a market, wherein for the full year of FY25, we don't see a lot of these experts talking about great returns. Everyone, or rather the consensus view is that you really need to moderate your expectations for the 2025, and this could be a stock picker's market as per se. So wanted to understand that as per you, how should be the portfolio allocation in terms of the category? What's your sense there?
So basically, I think one can look at our FlexiCam and take a call on where we headed. So obviously financials, BFSI. rather should be a big chunk of your portfolio, and going BFSI should be a big chunk of your portfolio. And obviously, one can look at IT, which can again be a big chunk of your portfolio, because these two are all-weather kind of industries per se. The platform companies, one can wait out. Probably one can stagger the investments there because there'll be enough opportunities coming by as such in that segment as such. We got 4 or 5 of them in our portfolio, and we're quite happy with them. So that's another one. And obviously, healthcare, which is should be a big portion also again once again of your portfolio. And so should be the hotel industry. I think that is doing phenomenally well as such. So this is how you should allocate. Be a bit conservative in your estimates and go ahead and pick up the stocks you like. So, I mean.
Dinshaw, how do we know the selling in mid and small cap is over? There is one thought which says that, okay, we're in for a long winter here. Why? Because for a market where you bought anything and sold, you bought higher and you sold higher, it had worked. Now it could be other way around, which is that every time markets will go higher, investors would like to sell and reduce their exposure to mid and small cap stocks and would move to large cap stocks. So is there a case for a lot of supply and low demand coming in small and mid cap stocks?
So Nikunj, actually, that's what I said, that probably if you look at the median corrections in the mid cap also, I mean, the index was down some, I think 15, 16%, again, same as NSE 500. And the median correction for the stocks was 30%. So it's obvious that the stocks within some pockets would have collapsed almost 45, 50 odd percent. Same was the case with the small caps, by the way. It was down, I think 17% of the correction in the small cap index, and the median correction was 30 to 33%. So it's obvious again that 50 odd percent is what some of the pockets would have collapsed. So basically, these are the pockets you want to look at. At least in the mid cap space, there are limited 150 odd stocks which you can look at and take a call there. And we're not calling out any big rally in the market anyways. So we're being very selective here. As I said, that probably in the mid cap space, we've been very, very. In fact, if you look at my large and mid cap fund, the mid cap fund, we're having problems identifying mid cap ideas out there. So we're being very choosy in that space. However, small cap, I think, has got enough and more to go for, because small caps, I mean, as I said, the correction has been overdone out there. Not the index I'm talking about, but you go beyond that index, and anything beyond 250, top 250 is small cap. So that's why you have enough to choose from within the small cap space as such. But again, we're very cautious out here. We're not taking a call that things are turning around out there and stuff like that. So that way, but fortunately, the SIPs or in fact the flows also in the mid cap funds have continued to remain pretty decent as such. So I don't see much happening in this space. As I said, it's going to be a stock pickers market. Obviously, when I'm talking about a time correction in the broader indices, we're talking about some pockets falling off and some pockets gaining. So that's how the time correction works. It can't be a flat line for all the stocks.
And Dinshaw, and lastly, since budget is just tomorrow, and as we were just highlighting that tomorrow is going to be a working day, but what is something that you will be watching out for in the budget announcements? Because in the last few months or so, we have seen a lot of these announcements related to capex and all have taken a back seat. A lot will be focusing on the fiscal consolidation and the strategies of the government out there. But what is that something that you will be watching out for?
Well, actually, the wish list is too long. But if I was to give some kind of a impetus, I mean, which points to look forward to? I think one obvious one is just give some impetus to consumption. And I mean, I remember the previous finance minister did that after the GFC crisis. That time it was excise duties. They cut off excise duties quite sharply and helped consumption improve quite appreciably at that point in time. However, the excise is not a big portion now. The only way you can do is, and GST is not a part of the budget, so that's out of the way. So only way you can do is to make the consumer feel excited about the savings that he's getting by way of, say, cutting off on the tax rates, tax slabs, whatever you will. It has to be a big ticket cut to get that guy going as such, because consumption has suffered a lot. I mean, in fact, if the results that you're seeing today, you look at the consumer companies, and they've just been falling off the cliff in terms of the numbers as such. I think that is where the impetus is needed. And secondly, obviously, One more thing that we are always looking forward to is on the capital gains taxes. I mean, the FIs have run away
All right, Dinshaw.
from this country, I mean, from India. Mainly that the capital gain taxes are going on, being implied on these guys when the world doesn't do that to that extent. So hopefully some rebate out there, not on the short term, but at least on the long term side to get them excited enough to come back in as such. I think these are the two major ones. And obviously the last one is the capex. Continue with the cycle. Do not sacrifice growth in this country for the deficit that you're trying to control. Let the deficit go for a year and probably play with that. So.
Well, I hope it doesn't turn out to be wishful thinking, and I hope from your lips to God's ears and the finance ministers, I hope, all of this gets announced tomorrow. But good speaking with you on the show.
Thank you. Thank you, Aisha.
If you like this video, then like, share and subscribe to ET Now.